Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Thanks for joining us today. We're going to get specific about non-warrantable condos today. So I'll introduce our two subject matter experts here in about a minute. We're going to let everyone log in, get their audio fixed up, and we'll get started. So hopefully everyone's having a great month, and hopefully we're going to learn a lot about non-warrantable condos to help you guys close more loans. So we'll get started here in a minute. People still logging in, just give us about another 30 seconds and we'll get started. I love having to put the glasses on to read everything these days. So, again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Thanks for joining us today. We have two subject matter experts, and they're actually in Florida, where we have a lot of these non-warrantable condos. Stacy, please introduce yourself.
Hi guys, thanks for joining us today. I am Stacy Flanigan, and I am the Senior Account Rep in the Tampa Bay area. Been with Angel Oak since the end of 2013.
Thank you, Stacy. And our other subject matter expert, Scott Gruebele. Scott.
Good afternoon, everybody. Scott Gruebele here, County Executive in Broward County, Florida, the South Florida. So we have the whole state here covered between Stacy and I. Been with Angel Oak since 2016, and definitely excited to go over all of the new features we're offering for non-warrantable condos.
Yeah, so you guys, like you said, we've got, including myself, I don't know, close to 28 years experience here just at Angel Oak. So we're going to jump into this. Just some housekeeping rules. This is being recorded, and we will get this out to you before end of day tomorrow. And this is going to be interactive. We've got a poll. We're going to launch a poll here in a minute, but we're also going to answer a lot of your questions here. So we've got this scheduled for an hour. If we need it, we'll use it. So, but before we jump into our PowerPoint presentation here, we're going to launch a poll here. And the question is, who has originated a non-warrantable condo in the last 12 months? So we'll let people get in here and vote. A lot of activity going on here. So, and this is live, just so everyone knows, this is live. So, give it another minute here, and all right. Okay, a good amount of you have participated, and thank you. About 70% have not originated a non-warrantable condo in the last 12 months. So this is going to be great information for you. So let's jump into the PowerPoint, and this is the opportunity for you guys here. So there are over 1.5 million condo units just in Florida. It's estimated more than 60% of the condos in Florida are non-warrantable. Inspections and improvements to projects are increasing, more delayed, and then non-warrantable condos are ineligible for conventional or FHA. So again, the poll results are telling we're going to hopefully help you finish your year strong. So Scotty, give us what makes a condo non-warrantable?
Apologize, guys, I was on mute. Absolutely. So as we all know on this call, there's a lot of different reasons that will make a condo project non-warrantable in the eyes of Fannie, Freddie, and FHA, the conventional world. It could be a reserve issue. Obviously, they require 10% reserves for certain LTVs, and then with others, you can do limited review. They require a lot of the inspections nowadays that they're requiring. And this is where we're seeing a lot of changes. I know here in the state of Florida, there's some legislation about to be passed that's going to make the inspection requirements even stricter on these condo projects. So we see a lot of loans come the non-warrantable way for that. Investor concentration, that's another issue we see in a lot of these projects, would make them non-warrantable. Litigations and assessments, in the conventional world, they're pretty straightforward in terms of what they will and will not do for litigations and assessments, whereas we have a little more flexibility in the non-QM world. HOAs still in the developer control for new construction projects. That's typically an issue, and new construction projects in general don't always qualify conventionally because of the simple fact that they have not gone through that approval process with Fannie and Freddie. Assessments
Anything else, Stacy, regarding investor concentration or?
No, the 20% with one entity, the reason behind that, I've had people ask me that, and the reason behind that is they can kind of sway the value of the complex. If something happened and God forbid they had to fire sale their units, they just decreased the value of the complex because now they're selling for a lesser amount. Or on the flip side, they could sell them to their own LLC at an inflated price and inflate the price of the complex. So that's why we do say not one individual or one entity owning more than 20% of the complex.
Okay. Great point, Stacy. Great information. Stacy, you're going to talk about litigation and assessments.
Yeah, so litigations, if it's anything structural, roof related, hazardous, like missing railings, loose railings, steps, stairs, anything that could cause potential harm or hazard, that's a litigation that we're not going to look at. Or if it's anything against the builder or developer, that's something that we won't look at. But a lot of times we see these small little slip and fall litigations. I had one where honestly the dog jumped in the pool, and it happened to be the HOA board directors that were in the pool at the time. So that was actually a litigation. We can do those. Anything that doesn't affect our unit. One unit's dripping because they overflowed their tub, and it's not affecting our unit. We're not below that particular unit. We're fine with that. So if you do have something with open litigation, just get the litigation docs, or at least let us know what it is, and then Scott and I can let you know if it's something that we can do. But anything minor, litigations are fine with us. Same with assessments. If it's not structural or safety related, we're okay with that. But again, like Scott and I mentioned, we don't ask for the latest inspections, or we actually don't even have the assessment question on our condo questionnaire.
That's pretty big. Thanks, Stace. And you can tell, obviously, the experience that both Stacy and Scott have. They've seen probably almost every example, and can get you pre-qualified pretty accurately and upfront. So let's talk about, Scott. Let's talk about land leases and recreational leases, Scott.
Okay. Yeah. So we'll start with the land lease. So projects that sit on land lease are basically a project whereby the developer leased the land that the project was built on. Like I said, commonly referred to as land leases. We are okay with these. These do not qualify conventionally. This would not be considered a warrantable condo if it's on leased land. With us, we're okay with it. The key is that the lease for the land outlives our mortgage. So as long as it has more than 30 years remaining on the lease, we're going to be perfectly fine with it. Same goes for recreational leases. So a lot of projects have a recreation center or some common areas that they have a lease on. Same exact thing goes for that. We're going to ask for a copy of that recreational lease, and we're going to review them on a loan-by-loan basis or project-by-project basis. As long as that lease has more than 30 years remaining on it as well, and it outlives our mortgage, other than that, we're just going to review it to make sure there's no other quote-unquote poison pills or bombs in there. And if there's not, we're going to be perfectly fine moving forward on that as well.
Yeah, and one thing I want to stress, one of the last bullet there is leases reviewed up front for an approval. Anything that looks funny on a condo questionnaire or just isn't, Stacy, Scott, and all of our other account executives are going to get into that at the pre-approval. We call it the pre-qual stage. That's all going to be worked on up front, so there are no, as Scott said, surprises down the road. So the more, we always say this, your AE is your confessional booth. Tell them everything. Why? Usually the first question they're going to ask you is, why are you coming to us for a non-warrantable condo? What's making it non-warrantable? Those are going to be the first couple questions asked. So thank you, Scott. Appreciate that. Stace, talk about condo tells, which we've recently added.
Yeah, we recently added the condo tells. These are super common in Florida, especially around our areas, around the beaches. We do these only on the DSCR program. Investor Cash Flow DSCR program is the only program that we do allow the condo tells. As far as the condo tell requirements, they have to be at least 600 square feet. They have to have a separate bedroom. So the bedroom cannot be in the living room like a studio type of condotel. So it does have to have a separate bedroom, and it does have to have a fully functional kitchen. And our definition of a fully functional kitchen is going to be a refrigerator, a stove, and an oven. But other than that, everything else is fine as far as the condotels go. And we've been seeing a lot of them come up recently ever since we added this program a few months ago.
Yeah, it's a great, addition to the great programs here at Angel Oak. So, Scott,
Now,
talk about,
Oh, wait, hold on, go back, John. Sorry.
my bad.
As far as figuring out what the cash flow is, because again, we're doing these on the DSCR program, the DSCR does have to come in at a 1-to-1 ratio when doing condotels. Your max LTV is going to be 75% on that. Now, because they are condotels, we're going to use the short-term rental analysis. So when you order, if it's a purchase and you order the 1007, you want to put in the comment section when you're ordering it through the AMC to use the short-term rental analysis. We have some AMCs that will do, that will do that for you. And that's definitely, you don't want the yearly rental market analysis done on a condotel, obviously. So you want to make sure that you are requesting the short-term rental analysis on your 1007.
Yeah, thanks. Yeah, Scotty, you're reading my mind. I am going to ship the condo questionnaire. So yeah, thank you for reminding me. So Scotty, let's talk, vesting in an LLC and the little parameters around it.
Yeah, so this applies to not only our non-warrantable condos, but really all of the programs that we offer. In today's market, most investors, or I should say most borrowers purchasing an investment property, a lot of times they're experienced investors, but we also see just your first time investor looking to buy their first investment property, they're being advised to take vesting in the name of an LLC for liability purposes and more importantly for tax purposes. And that immediately makes that a non-warrantable condo loan because conventional will not allow you to take vesting in the name of an LLC or an entity. We allow those on condos, single families, really on any type of property. We will allow your borrower, your buyer to take vesting in the name of the LLC on a non-warrantable condo as long as they're purchasing it as an investment property.
Yeah, thank you, Scott. I got a question here. For short-term rental income condotels, since we're using the short-term rental analysis, that means the unit does not need to have been rented out short-term prior to the purchase. Stacy, I'll let you take that one.
Yeah, that's correct. So more than likely on a condotel, it is being rented out on a short-term basis. But yeah, we're going to use what the appraiser gives us as the short-term or as the market rent analysis. Now, if it happens to be a refinance, we can use their short-term rental analysis. They can give us an Airbnb printout or a VRBO printout, or even a printout from the complex itself showing what they've been renting it for each month. And then we can take the average of that and use it when it's a refi. When it's a purchase, I do have to use what the market rent analysis is on the appraisal.
Yeah, thank you, Stace. Channy, hopefully that answered your question. So great questions. We're getting them in here, so appreciate it. Let's talk about, Stace, let's talk about updated guidelines to, our most recent updates.
Yeah, so Scott mentioned these when he was going through what makes a condo non-warrantable. Right now, we're seeing, and you guys are probably all running into this, where the insurance companies, the HOAs are raising the deductibles on the insurance because of how pricey insurance is, especially in Florida after all of our hurricanes. The insurance prices are going through the roof. So to help the condo complex with those high insurance rates, they've been raising their deductibles. And I don't know of another lender that allows you to go past or over a 5% deductible on insurance, but we actually allow that now. This just came hot off the presses about a week and a half ago. So us in Florida, we're so excited to add this because it's becoming more and more common. And people were thinking they had no outlet. They couldn't do anything. They couldn't purchase. They couldn't refi. They couldn't sell. We will allow up to a 10% deductible now on all coverages. So that to me is huge. And again, especially here in the Florida area. Also, as far as the roofs go, we're seeing cash value for roofs now on the insurance policies as well, and we allow that. You guys are probably also running into that. That's becoming very common as well. So those are two updated guidelines that we've added recently where we're definitely seeing an influx. And for anybody that's on the call that is not in the state of Florida, we allow you to do the DSCR program in up to 12 different states without you being licensed there, as long as it's okay with your company, your management. We allow you to do DSCR in 12 states where you do not personally have to be licensed in those states, and Florida is one of them. So if you want to start marketing, and we'll get into our marketing materials later, in these different states, we can definitely get you those states, but Florida is definitely on there.
Yeah,
Yes.
Go ahead, Scotty. So
I was going to say that's a great point. And just, so we're clear, because there are people on this call from out of the state of Florida. Everything we're discussing here, all of these guidelines, these apply nationwide. These are not just to the state of Florida. So if you have a non-warrantable condo in California, Washington, New York, et cetera, New Jersey, these guidelines will apply to any parts of the country. And to speak a little bit more in depth here, Stacy nailed it right on the head. The cost of insurance is skyrocketing across the country. A lot of these HOAs, when they're making these decisions, they're doing it in the best interest of the HOA and the unit holders, and they don't realize that by taking a higher deductible to reduce the insurance cost, they don't realize that's affecting their ability to get financing in the building. And a lot of times we're seeing that they're taking cash value on a roof as opposed to replacement cost value to save cost on the insurance. And then I'm sure a lot of people on this call have also seen co-insurance. Co-insurance is starting to pop up because they're not able to get the full coverage with their primary carrier. So they're having to go out and get co-insurance to meet the insurance requirements. This is a fluid situation. We are currently looking at all of these different things on the table right now and trying to find solutions to be able to offer financing for them. For example, I can tell you actively, the co-insurance piece is something we're currently looking at a solution for, and hopefully be able to bring it out to the market shortly. But Stacy nailed it on the head. I don't know of any other lender out there that is doing deductibles over 5% in this market right now. So that's a huge one. If you guys have a building you're aware of that is higher than 5% deductible insurance, we can get those all done for you. And then obviously, this was literally today, hot off the presses, is that we now allow the cash value on the roof versus that replacement cost. So that should open up a whole nother window of projects as well.
yeah, man, you guys still amaze me at all the stuff that you guys know and are. I mean, that's what you get when you're working with Angel Oak and our account executives. I mean, the knowledge and that they have is second to none. So, hopefully, you've seen we're through the PowerPoint portion of this, but because we have a lot of great questions here, we're gonna jump into our website, and we're gonna show you, one, where to get the condo questionnaire and an example of one. Then we're gonna go into our pricing engine. We call it Quick Quote. We'll go in there, and then lastly, we're going to talk about how to even just market yourself and use Angel Oak's great marketing portal, not just to market yourself for condos, but for all of our programs. So, you guys, I'm gonna swing my hopefully you guys can see the website. Let me know if you guys can see that, Scott.
Yep.
You can. Perfect. So let's go to, before we can jump into our quick quote, let's go to where our condo questionnaire and most of our documents are kept here. So this is a great resource page. It's titled Resources, Approved AMCs. I'm getting to this. Hold on, guys. Yep. All right. Here's our non-warrantable condo questionnaire. And let me know if Scott or Stacy, if you can see this. it's popped up.
If you can zoom in a little bit, John, that would be great, so everybody can kind of see.
Yep, hold on. Let me know if that's big enough. Oh,
Maybe one back.
yep,
There you go.
there you go.
Perfect.
You want to just cover some of the things Scotty just talked about on this?
Sure. So, the biggest question that Stacy and I get as account executives when usually you guys have a non-warrantable condo coming our way, in most cases, it was submitted to a conventional lender and they found it to be non-warrantable for some reason, and you've already had a condo questionnaire done. Unfortunately, in those cases, we cannot use that, or I should say, better phrase it. It's best for us not to use that condo questionnaire, okay? Not that we can, but it's best not. The reason it's best that we don't is, as you're gonna see as we go through this condo questionnaire, we are asking minimal amount of questions and only the questions that we need to be able to approve this project on the non-warrantable side. If we use a condo questionnaire you may have already had filled out for a conventional loan, and it has questions on it and answers on it that we would prefer not to see, we cannot unsee them. So sometimes it's an inconvenience when we say, hey guys, we're gonna need you to fill out our condo questionnaire. We do realize that there's a cost associated with that for the borrower, but it is in the interest of getting that loan and that condo approved. And you have your account executive who can review the information on the questionnaire you currently have and be able to determine if it's going to pass or not. So always send those in. We're going to take a look at them, but we are going to ask you to fill out this condo questionnaire, and then we can dive right into it. You're going to see this is minimally, it's not invasive at all. It's a 2-pager, and the questions are extremely, very basic. You're talking about total amount of units in the project, total amount of units sold and closed. Is there a litigation in the project? Does any individual or entity own more than 20% of the units? It's asking all of the questions to answer the highlights and the points that we just covered. You'll see there at the end of the first page, does the project contain any of the following information? Deed or resale restrictions, manufactured homes, units that are used for live work, etc. Basically anything used for commercial purposes. These are standard questions. On page 2, I would like to highlight that in this section, we're going to ask them how many units do they have delinquent 60 days or more. We're not concerned with 30 days, just 60 or more. And then what's the total amount owed on those units? The next question, number 2, and this is the really cool part, is we're asking them to fill this out for us. What is the income? What is the operating income? And what are the reserves being collected on the current year's budget? You'll notice in question number 3, this is what Stacy was referring to earlier. We're saying, does the homeowner association have a reserve fund separate from the operating account? And if yes, what's the amount in the fund? So it's important that they fill that out, because we're going to add the total amount in the separate operating account from question number 3 to the amount of reserves being collected on the current year's budget in question number 2. And we're going to make sure that that meets the reserve requirement based on the program and the loan to value that we're doing. The beauty about this, guys, is on our condos, our non-warrantable condos, we do not need the budget. We do not need the condo docs. We do not need any bylaws. We literally only need this 2-page condo questionnaire, and that is it. So it makes it very clean and easy to get done. We ask a few more questions here pertaining to insurance. Then we ask for the policy carrier's information. And lastly, the individual who completed this questionnaire to sign and date at the bottom, and you're done. You're good to go. So as you can see, guys, it's about as minimally invasive of a condo questionnaire as you're going to find in the industry.
Yeah, and Scott, the great thing about it, we also have a non-warrantable condo questionnaire answer key right here too, right? We make it pretty easy for you. So just so you guys know that too. Stace, you want to take us through just the quick quote?
Sure. So John's right here on our main page to our website. Our website's angeloakms.com. You'll see you can access the non-QM quick quote in 2 spots, right there in the middle where John has highlighted, and then up at the top also, second blip over as well, where it says non-QM quick quote. So you'll click on that. And then you're going to leave it on the broker channel. So your loan amount, you're just going to put in your dollar amount, super easy. You're going to put in your FICO score, your loan to value, the property state it's in.
Oh, sorry.
You're good. You can pick Georgia. Property type, where it defaults to 1 unit, you want to change that to non-warrantable condo. You'll also see the option for condo tel as well, just because you want to make sure it's priced correctly. So in this case, we're going to do the non-warrantable condo. Transaction type, where it defaults to purchase. This is where you're going to be purchase, rate and term, or cash out refi. We'll leave it on the purchase. Your income documentation defaults to full doc, but this is where you can change it to a bank statement program or DSCR program, or if it's full doc, that's fine too. Occupancy is defaults to owner occupied. You can also change that to second home or investment property as well. So here we did a full doc, non-warrantable condo, investment. You changed it to investment, right, John?
Yes.
Yeah, okay. So we're doing a non-warrantable condo purchase on an investment property. You'll see you have 2 options, platinum or portfolio select. You'll see the difference of why it would be platinum versus portfolio select. It's basically your bankruptcy seasoning or your housing event, which is going to be a foreclosure, deed in lieu, short sale. So if they don't have any of those items, then you're going to look at the platinum rate. So you can see the LTV that we requested shows 70%, but it's telling you the max LTV allowed for the information that you put above. We can go to 80%, but because we selected a 70%, that rate that it shows, 8.375 is the rate for the 70% LTV. And then off to the right, you click on the view rates, and now you can see your full rate stack. So the 8.375 below does have a cost associated with it. It's $6,000 in this particular scenario, loan amount. It's going to be $6,250, which is a price of $98.75. Now to send us the pre-qual, you would just highlight your rate option and click on select option. This is asking you, this is where you're going to send it to Scott or I to pre-qual your loan for you. When it asks you for your MISMO 3.4, you're more than welcome to put it on there, but if some of you are LOs on this call, you probably don't know how to save a file into a MISMO 3.4. I know I don't. So just hit next. We don't need it. Just click on next. Here's where you're going to select your account executive. And then your information will go below that, your company, your loan officer, MLS, phone number, borrower's name. And here's where you can just drag and drop your 1003 and credit. Now, if it was a bank statement program, you'll also see a box where you can drag and drop all your bank statements in there. There's an additional comment section at the bottom as well. This is just going to your AE. So if there's anything that you need to tell us about the loan, or any requirements, maybe you did a 70% LTV, but you would also like us to price it out at 75. Just put any comments there and then hit submit, goes straight over to your account rep. And within 24 hours, we'll have your approval back to you.
Yeah, in the States, it's, you know, and if it's a DSCR, you can probably expect it back same day. If we're, what's that? Can you not hear me?
Yeah, you're good. We can hear you, John.
That's simple.
Yeah, so if it's a DSCR, you probably get the pre-qual back within a day. If it's bank statements, we're going to calculate that income for you. And that's really important, working with Angel Oak. We're calculating that those bank statements up front for you. And that's the income that's going to be used throughout the entire underwriting process. So just want to make sure everyone's aware of that. And that might take a little bit more than 48 hours, although I've seen them coming back really quick. So, but just allow us, we're all about setting expectations when you're working with us from the account executive level. So just make sure you're aware of that. Scotty, we've got some time too. We're only about 37 minutes past the hour. So let's talk about marketing. Everyone's looking to market themselves differently to get, new business in the door. And it's more and more, I'm even being contacted more and more every day by everyone saying, I've got to learn non-QM because I don't see, agency rates coming down anytime soon. So a lot of people, a lot of companies, a lot of loan officers have been reaching out daily to us. So you look at 70% of you that voted in our poll have not originated a non-warrantable condo in the last 12 months. So that's why you're here. And we're going to show you some tools on how to market yourself outside the normal channels. So,
yep. So
just take some airtime. I'm going to log in here, Scotty. So
absolutely, go ahead and log in. And so, yeah, I've actually did these, using non-warrantable condos is going to be a great way to fill a room with referral partners, realtors, etc. This is a hot topic if you're in a market that has a lot of condos like Florida. I did a presentation for one of my loan originators 2 weeks ago, and he was able to get over 80 realtors in a room, and the entire presentation was geared around non-warrantable condos. It kind of gives you an idea of the interest that's out there for them. As we all know, with prices where they are today in the housing market, condos have become a viable option for a lot of people because they're priced a little cheaper. And so, they're picking up steam. You can come right over here as an approved broker with Angel Oak to our marketing portal, where you're going to have access to a number of different things, flyers, social media posts, whiteboard videos that are pretty cool that you can add to your website, and even a PowerPoint presentation similar to the one we just did. And these PowerPoints, these flyers, all of these things are 100% customizable. So you will be able to open up a flyer. If we can jump in there, John, and show an example of a flyer. There we go. So this is our Condotel flyer. It basically just gives you the high level overview, details, and highlights of the Condotel program. But what's really cool is you'll see in the upper left side, you've got the green buttons here for a left logo, a right logo, and a photo. You're able to slap your logo onto this thing at the top, on the left side, or on the right side, and then add your photo down at the bottom like this gentleman did with all of his contact information. You can even co-brand these if you're doing a presentation in conjunction with a title company or with one of your realtor accounts. You can co-brand these and add 2 logos on here and add 2 photos to them as well. So it's a great way to really put these out there. You can obviously copy paste them to your social media pages if you needed to, or if you wanted to just hit the road and go visit some of your accounts and drop off some fresh, interesting information, it's a great way to do it. We also offer, if you can go back in there, John, to the social media posts,
yep.
We offer pre-canned social media posts on every product and program that we offer, and we offer them in 2 different ways. First would be if you as an originator are marketing directly to a borrower. So you'll see here we have a number of different images about the bank statement program geared towards marketing directly to a borrower. And then we even have some pre-canned verbiage that you can copy paste and slap right onto the comment section of your post. And then here we have the pre-canned verbiage for your realtor. So you'll see the pictures are pretty similar, all in the bank statement program, but now the information provided is geared more towards you marketing this product to a realtor. So again, this is all free to any approved loan originator with Angel Oak Mortgage Solutions. Flyers, you have posts for your social media, and then if we can kind of just open up the PowerPoint real quick, John.
Yep.
So this is a fully customizable PowerPoint presentation. We have 2 versions, a long and a short, and it's designed for a loan originator to present to his or her realtor base or potential realtors all about non-QM products and programs. This can also be tailored directly to non-warrantable condos if you chose to do that. And what I have a lot of my accounts do is they'll take the time to take this presentation, fully customize it with their logo, their contact information, even their colors, and save it. And then their loan originators are then able to go out and do as many of these presentations as they'd like, speaking about non-warrantable products and programs, or again, if they wanted to zero in specifically on a topic like non-warrantable condos. So this is great information. Again, guys, it is free. There's a flyer there for you to promote your event as well. So if you wanted to, I highly recommend giving 30 days, emailing your entire realtor base, and here's a perfect flyer to do it with, to say, hey, we're going to be, you're cordially invited to a presentation on non-warrantable condos, bank statements, whatever it might be, and you can promote the event to get a lot of people in the room. This is a great way to touch realtors. Usually every originator that I've been with, done this presentation with, will usually walk out of the room with at least 2 or 3 hot loans in their hand. And as I mentioned, as your account executives, Stacy or myself will come with you and literally do this presentation with you. You can call us your investor, you can call us your bank, you can call us your underwriter, whatever you want to call us. We'll come and we'll help present on your behalf to help generate that business for you.
Yeah, Scott, we talk about serving an underserved market, borrowers, self-employed borrowers, non-warrantable condo borrowers, right? But this portal, our marketing portal, is the most underutilized portal, and it's great information. It's all pre-canned. It doesn't cost a cent to try to market yourself outside your normal channels, and it works. We've seen it work. The realtor presentation, I think, is still one of the most powerful presentations you can deliver to your referral base, and really become their go-to expert, because in addition to conventional and FHA and everything else that you can do that's right down the middle of the fairway, now you're offering them non-QM and to one of the fastest growing segments of the workforce, which are self-employed borrowers. So anyway, a couple other things. This is being recorded. We will get this out to you before end of day tomorrow. If we didn't get to all your questions, we will get your account executive to get with you and answer your questions that we may not have gotten to. So there is a small survey after this. If you stay on and take it and give us some feedback, because we're always looking for ways to deliver content to you either better or more efficient. So Stace, in closing, anything you want to add?
Just thanks for listening, guys. We appreciate it. And we're definitely seeing a lot more non-warrantable condos that Fannie and Freddie are no longer able to do. So definitely bring them our way and we'll help you get them closed.
Yeah. Scotty?
Yep, appreciate everybody hopping on today. Look, we all know it's a struggle out there in the current market we're in, right? It's a scrap on a day-to-day basis. And our job is to help empower you guys with more tools and information to be able to close more loans. That's what we're trying to do here with all of these non-warrantable condo updates and changes. And stay tuned. We might add some more in terms of co-insurance and some other details that'll allow you guys to go after some more of these.
Yeah, so yeah, thank you everyone for participating. Again, we will get this out before end of day tomorrow. Next week, we're doing a deep product dive, I believe, into bank statements at the same time next Thursday. But on behalf of everyone here at Angel Oak, we really do appreciate you taking your time. I'm lucky enough to get to work with 2 great people, Stacy and Scott. Thank you for taking the time and being the subject matter expert and professionals that you guys are every day. So thank you guys. Love you guys. Thanks everyone for joining us today. Thank you very much.
Thanks, guys.
Okay. I'm trying to close.